It's because it's obnoxious.
I don't hear it all the time, so I kind of like it.
Hector, welcome back to our show. It's been too long. We have to start doing this every week.
Agreed. Let's
Everybody,
put it
Hector
on the
Ramirez,
calendar.
he's my go-to guy for all things loans. I trust him with my life, my children. Wouldn't trust him with my wife though. So.
Awesome. Thanks for having me on. I really appreciate it. I always love coming on. We've always obviously enjoy your friendship and love talking real estate and helping people out. It's what we do. It's what we love, and um, certainly a ton of stuff happening this week. And so, I always appreciate the opportunity to come on and talk with you. And yeah, absolutely, we can absolutely make this a weekly event.
I think we should, maybe not Fridays because I'm always doing video every day, and I'd love to have you maybe like Mondays or whatever. We'll figure that out. But let's
Sure,
talk about
sure.
what's going on. Last Friday, was it last Friday already? Wow, Silicon Valley Bank. Tell me about it. What happened?
Yeah, really over the weekend. So yeah, kind of big news, right? 16th largest bank in the U.S., Silicon Valley Bank. One an institution here, obviously near and dear to us, being here in Silicon Valley, collapsed, right? So basically, the Fed took over took over the bank to make sure that they could deliver and not fully collapse, right? And we kind of saw a run on the bank, which basically means that a lot of their clients, depositors, started quickly withdrawing money,
Right.
which could have been catastrophic. The good news is that this is really isolated. We don't, in other words, we don't expect um, you know many other banks to be collapsing, and the
But
fact
there's
with
going to
the
be a few, right? Because there's a few that were doing the risky things, just like Silicon Valley Bank did. Like I think Signature did it.
yeah, Signature Bank out of New York, actually, same thing this past
Right.
weekend, had something similar happen. And I'm not as familiar with them, to be honest. I think they're kind of crypto based. But in terms of Silicon Valley Bank, I mean, it's certainly a much larger bank. This is something that hasn't occurred since 2008, and it's really a big deal, right? This company, Silicon Valley Bank, services many large companies here in Silicon Valley, right?
Right.
And so the fact that, hey, they could potentially collapse could have some ripple effects into companies not paying payroll, and just some, it could really gotten into a really ugly situation, and again, fortunately, the bank stepped in, president, everyone got involved and guaranteed that everybody in Silicon Valley Bank would absolutely have their assets, secured, right?
Right.
So that was really important, for them to do that and not cause a ripple effect with other banks or anything. And yeah, and like you said, and I mean, it's something that could absolutely, happen. There are some other banks that have been, in the spotlight this past week of just kind of, you know,
Yeah.
keeping an
I
eye
mean,
on. But
so we've been running at such a fast pace for so long. I mean, let's just take Silicon Valley and all the other, tech banks that are out there. There's mortgage banks that are suffering right now. There's banks that are getting bought and closing up right now,
oh, absolutely.
right? And that's nothing to do with them or the management. It's just that they had a business model that just didn't compete in today's market, so they had to shutter and had to move on and do other things. There's talk about Chase closing up mortgages, and for a while, I think Chase even stopped doing seconds for like HELOCs. And
Yeah,
then
Chase is still the number one bank and is really on the highest tier of any bank, right? So they really are, obviously in a very strong position.
right,
But absolutely, you're absolutely right. Like as economies change and as markets change, I mean, we've experienced, especially on the lending side, so many changes this last 12 months.
yeah,
We're going from kind of our biggest production years, to kind of almost falling off a cliff, right? And so we've experienced a lot of changes. And just to your point, though, you're absolutely right. Like just being able to pivot, right? And a lot of these banks will do it. Are they necessarily in trouble? No, not necessarily. But they have to look at their bottom line, and sometimes it's a matter of pulling out of correspondent business or not doing certain types of loans. Banks, as I mean, their main, uh, their main, I guess what they do is really take deposits, right? I mean, that's really what that's their biggest thing, right? They reinvest the money that they either borrow or
Right.
that's deposited into their bank, and that's their core competency, right? And that's really what their primary purpose is for the
Right.
most part, right? Like
The
us,
the, the
mortgage banks are different, right? But depository banks, I mean, that's it, right? And
right.
so they always want to protect that um, and have that going, I guess you could say.
Yeah, and I think it was like in 2000, and around 2000, maybe 2008, where they switched it, where you were either a depository bank or a mortgage bank or an investment bank. Now you can mix it together, and there's all these oversight things that stuff. And this is us tightening up the screws, saying, "Oh, we fucked up there, or we messed up there. This needs to be changed." And I'm not saying it's all financial institutions. I mean, look at the stock market, look at the tech companies; they're all laying off too, right? So we're all tightening our belts. There's real estate companies that are hurting right now. There's real estate companies that are going to shutter their doors, and
It's crazy.
it's just a fact of life. And it's not bad or good. It's not the people that are there are bad. It's just that's what happens in a contracting market is things
Right.
change,
Yeah.
right? And it's actually a good thing for us to stop for a bit and put our heads up and figure out where we are and figure out what the next directions are. And I think that's the thing is like with this, it's a good reckoning to say, hey guys, if you're a bank, if you're a tech company and you have $1 billion in one account, you need to change your attitude and start shifting stuff around and
Potential, yeah.
do the right things to protect yourself and your stakeholders. At the same time, this leaves a lot more opportunity for us. And I think we were talking about it before we got on live, right? What's something that we can do as, just you and me as homeowners or renters or an engineer that's thinking about buying a house?
Like with respect to what?
To right now, like what are the opportunities?
Well, I mean, I think, the biggest opportunity for the buyer today is that a lot of these, things that are occurring, such as the bank collapse, such as higher interest rates, such as looming recession, they create doubt, right? And they create fear. And you know, as we've got an inventory issue, right? We've had an
Hmm.
inventory issue now that's been building up for gosh, over a decade, right? And so at the end of the day, we just don't have enough housing right across the country, right? Where we're growing, um, we're, we're growing as potential homeowners, and um, what exists today is the fact that while some of this negative news, it's causing people to hold from buying, right? It's causing people to sit on the fence, and I think that's one of the biggest benefits is to say, hey, to sit with an advisor, to go down and check the boxes and see if potentially this still works for you today, and if it does, then to take action and to enter the market before everyone else does, right? Because competition is what causes our house prices to really shoot up, right? And what we've experienced the last 6 to 9 months is a much easier market to play in, right? Like every one of our clients it has mostly been getting offers, at or below asking, and more importantly, we've been able to negotiate, tons of credits and different things, right? And that was
Yeah.
something that hasn't existed for a very long time. So I think that creates, a great opportunity. Also, I mean, as a result of this, we saw tremendous reduction of mortgage rates this past week, right? And so, in the midst of kind of um, in the midst of kind of chaos, I guess, there's certainly significant opportunity.
You saying rates went down a little
They
bit?
did. Yeah, they did. So, as you know, most of February, our rates shot up 300 basis points.
Yeah.
And again, since last Friday, we received it all back, right? And you can see here, here are our, standard mortgage rates, 30-year conforming, or 30-year jumbo, or 30-year FHA. Um, 30-year VA, USDA, and then our 15-year conforming. And these aren't, I say are, I mean these are just mortgage rates, right? This is average mortgage rates across the country, right? Just to give everyone an idea of where rates are today. Could potentially some be lower? Yeah, of course. Could you potentially buy them down and do different things to get a lower rate? Of course. But this just gives you an idea on the average of where mortgage rates are today.
Look how competitive the VA loan is. That's great.
Absolutely, it's the best loan out there. You know that.
Yeah.
And that's why I do so many of them. Like it's absolutely the best loan program out there. And we should do one of these on just that, on that loan
Yeah.
product alone.
USDA seems to be an enigma here because, in the Silicon Valley, we don't have a lot of agricultural property, but you go outside, you go down to Morgan Hill, you go out in the outskirts, and you'll find USDA qualified properties. It's like almost all of San Benito County is
Yeah, there
USDA
are, and
qualified.
some up towards Santa Cruz Mountains. I mean, there's some areas, and just so people know, I mean, this is a USDA is 100% finance loan, right? And it just one of the important parameters though of this program is you have to finance a property within the area that's considered, agricultural or under USDA, right? So how we would determine that is you can Google USDA and there's a map that you can go to, and basically you can enter any address, or you can look at a map and see what areas would qualify. But this is a program besides the VA program that's 100% finance, so you can actually buy a property without putting any down payment. So
But it has to
but
be in
yeah,
certain areas, right?
yeah, it has to be in certain areas. And as you alluded, I mean, we just don't see or do a lot of them, just because, where we're located in Northern California, and most of our consumers just aren't willing or aren't willing to kind of go so far out.
And that kind of opens up if you have a low down payment. That's what FHA is about. So it's 3.5, 2.5, 3.5.
Yeah, FHA is at 3.5%. So FHA ideally was, you don't have to be a first time home buyer. It's actually one of the fallacies with that, but it's intended for a first-time home buyer. So FHA has actually, some of the lowest interest rates. If you can, as you can tell here, really the lowest interest rate of almost any loan. Okay, and FHA is very forgiving when it comes to debt and credit. Debt and credit. So, gosh, at one point we were going down in a 580 credit score, uh, debt to income ratio. We can go up, typically as high as about 55% versus, 50 with conforming. So it's going to be very forgiving with debt and with credit. And the minimum down payment, as you mentioned, is 3.5%. So it's a good program for someone trying to get into a home. A lot of times, someone who's on that kind of lower down payment side, a first time home buyer, we'll typically maybe compare what conforming looks like versus FHA, right? Normally, if you're below 680, it might make sense to go FHA. And it just depends on on the client situation, right? But a lot of times, again, we'll do a side by side. We'll see what's a better option, and then potentially present it that way.
Yeah. I think looking at all that's why you want to talk to somebody that has been around, right? We talk about this every time. Don't talk to I mean, you're welcome to talk to a bank. You're going to get super, super competitive rates, but you're not going to get somebody that can help strategize and
You
be
just want
an
options, right? You're
advisor,
making
right?
the biggest investment of your life. It's important that you're talking to someone knowledgeable that knows the area in which you're working in and looking to buy in, that can give you options, right? I
Right.
mean, I think today, one of the difficult parts, even for us as professionals, is that Everyone knows somebody in the business. There's so much information. It's like information overload, right? And some of our clients even feel like they know sometimes more than we do, right? Just because there's so much info out there, but it's not necessarily one, true, and two, it might not necessarily apply to them in particular, right? I mean,
Right.
Uncle Joe, he bought 10 years ago, right? His situation is completely different to yours, right? So while he, obviously has your best interest in mind, might not be the best um, resource for you to just completely lean on, right? And so,
It's kind of like
um,
that meme where dads
oh, I love that.
typically
I knew
come
you're
in
going
and
to this.
screw up the deal for the real estate agent because they come in and say, no, there's something wrong with this and this and this and this. And
uh,
they freak out. That's actually happened
when
to me.
Oh my gosh, when dad shows up with a tape measure and a ladder, like to
Oh,
the inspection, it's a wrap.
yeah. You know what? I'll just start filling out the cancellation form right
Yeah,
now,
exactly.
please.
Oh boy, just got
So,
a lot harder.
I think we started talking about this yesterday about this new loan that's coming up on, and it's not for move up buyers. It's not for whatever. It's CalHFA.
Yeah, Cal HFA is a state agency that helps. They provide down payment assistance programs for borrowers in California.
I
Really
misspelled
great
it.
CALHFA. Is that what you said?
Yeah. No, I
Spell it.
said
Yeah.
CalFHA.
Oh yeah, it happens all the
Or
time. It's
yeah.
reverse of FHA. It's HFA. But it's a great program. They've been around a long time, and we've been able to help many borrowers using them. Okay, and they have kind of like their go-to programs that are available all the time, and then they also gain financing like through Senate bills and different bills that are voted in, and they're able to do some really special stuff, right? And obviously, being in this business a long time, I've worked with a lot of different down payment assistance programs, right? And I've helped a lot of people to realize their first home by using some of these, and they can be very beneficial for some, right? But CalHFA is actually one of the ones that is kind of my go-to. They're very easy to work with. They've got really great programs, and they've come out with a new, really outstanding program. And man, I feel like we should dedicate an episode, a show just strictly on this. I mean, I've been talking about it all week. We have a bulletin actually. Do you want me to share it? I might have a bulletin up that
Yeah.
came out online.
So just to be sure, this isn't like an equity share product.
Yeah, it is actually. Let me
Okay.
see where I might have. Let me dig it up. I thought I had one just readily available. I wasn't sure if we were going to talk about this today. Mm, I've
So
been having a lot of conversations on this week because it's
right.
one that is, everyone's talking about it for one. For two, got a lot of clients who have been on the fence who are just right on the cusp, and this can help tremendously. So really what it is, I'll go ahead and explain it because I don't
While
see it
you're
very.
looking for it, maybe I can kind of go through and talk about it a little bit and compare it to some other things that I've seen in the past.
Yeah.
So for me, this is a great opportunity for people that are struggling with down payment. They're limited on income. They don't really
Oh,
fit
fancy.
into the 20% down, $1.5 million home. And it's, the thing is you're not going to get the forever home on this. But understand this is the opportune time to buy into it because there's less competition. And yeah, what we always tell people is we don't want you to buy the house or look at that house that just came on the market. We have to see this house because it has a shiny new kitchen. You probably aren't going to get to that house because when it comes up to competing against other types of loans, these down payment assistant programs have some other issues. They're not as competitive as somebody that comes in with 20 or 30 or 40, 50% down and they can buy it as is. So,
Yeah, I mean, I never like to discourage someone to say, "Hey, we can't get you something," right? But
right. Absolutely don't be discouraged.
where you're going with it is exactly on point. In other words, as a first-time home buyer, someone who is just like really looking to get their foot in the door, like if prices or rates drop one or the other, because they're inverse, if one or the other drop, our market, the industry as a whole is on fire, right? And so what happens at that point is competition increases, and you're absolutely right. If I've got 5 offers and one of them has a down payment assistance program with 0 or very low percent down, it's going to be very hard for us to compete on our behalf of our clients, right? I mean, it might be more of an emotional deal with the seller. And so absolutely right, in times like this, and if you recall, like to previous episodes, I've been saying, I mean, this is the year for the first time home buyer, and
Yep.
although we were talking about it probably earlier this morning or yesterday, that we've been seeing, almost a 10 here locally, 10 to 15% increase in homes going into contract over asking, right? We've seen this shoot up over just the last couple of weeks. So what that's an indication of is, hey, buyers are off the fence, motivated. Our applications have been way up this year, which means that, people are out there shopping, right? More competition. I know we've been up on a couple deals we got into contract, and other ones we've been offering. I mean, we've been seeing more offers, right? And so if things heat up, you're absolutely right. It's harder to get into contract as a first time home buyer, right? Because you're up against very strong offers and
Yep.
that have a lot better ability to just go up and win a deal, right?
Right.
So
Well,
yeah.
well, people are saying that it's the first time home buyer, is the year of the first. I also contend that it's also the year of the move up buyer. Now, a lot of things have to align for that move up buyer, right? If you have a smaller home and you don't have a 2.5% interest rate, right? You, you shut yourself off. So when you come back in, I'll
Oops,
respond you.
I'm trying to show. Can you see my
Yep.
share screen or no?
There you go. So a lot of things have to align. Let's get back to this CALFHA since it's up here.
So yeah, let me find that. Perfect. So Senate bill, just got basically enacted. This is a program that's going to kick off this month on the 27th. But we can obviously approve and start looking now with clients. It's a bill that, it's a program that won't be available until March 27th. And what it is called California Dream. And what it does is it provides buyers, first-time home buyers, that's someone who hasn't owned a home in the last 3 years, the ability to purchase and borrow an entire 20% down to purchase a home. Now, when I mean borrow, that means that when they decide to sell the home or refinance the home, they would then repay the 20% down that they initially borrowed.
With interest, with equity, with
So it's an equity share position. So what that means is that now this is subject, and just kind of bear with us, because the guidelines, we just received the bulletin. There's a lot of lenders that are
absolutely.
running and doing videos on this stuff and doing a ton of stuff. We just don't have all the info. I actually spoke with CalHFA this week, and they said the same thing. And just give us about a week. But long story short, it's an equity share, which means that CalHFA is basically investing with you as a buyer. So they will, once you sell the home, they will take 20% of the appreciation. So of the money, of the amount that home gained in value since you bought it.
Right. So it's not the proceeds; it's the actual gain, the gain. So if you buy a house for $100,000 and now you can sell it for 200,000, they're recouping 20% of that extra $100,000, which is $20,000, not including sales tax, selling costs, holding costs, etc.
Correct. Exactly.
Right. And that's 20% down. Now, are there guidelines for the house? Is there like a
So
VA
you
or
can be
FHA inspection?
This follows our conforming guidelines, so our Fannie Freddie, right? So really straightforward conforming loan at 80% loan to value. It has to be, obviously your primary dwelling home. It can be, what's neat though, is it can be a single family condo, townhome, I think even manufactured home.
But not a mobile on a leased lot. That's
Uh,
always been a stickler.
Yeah, I mean, we're going to follow conforming guides, right? So I
Right.
think if it's leased over 30 years, you can. And obviously there's a few other stipulations with manufactured homes, but obviously case by case, we want to look at it first just to confirm. But there are you can do manufactured homes. I mean, Fannie does allow that. So there's potential that we can with this product as well.
Can it be 1 to 4 units?
And no, it has to be a 1 unit property.
Okay.
Minimum credit score likely going to be 680. There's a potential we might be able to go a little bit less, but if I base it off kind of previous conforming guidelines and CALFHA guidelines, 680 I think is like 45% debt to income, and then we can go to 50% debt to income if you're above 700.
And do they need reserves?
Typically not. So reserves on a conforming loan are based off the findings from the automated underwriting system. So typically not. But again, once we run the loan file through, that's what tells us, what actual documents we need for submission, reserves, mortgage insurance if it's required, etc. So
So
not
in a
like
scenario like this, let's say that there's $1 million home and they qualify for it, except for the fact they don't have cash for closing costs. Can we ask the seller to help pay with the closing costs?
100%. You better believe it. That's what we're gonna do.
Yeah.
But the reality is, gosh, you can get a home with 10, 15,000 out of pocket with this program, right? And then on top of that, as you mentioned, we always have the opportunity to negotiate with the seller and potentially have them pay for your closing costs. So it's a tremendous opportunity, and it's one that's limited. So, with these programs, there's a certain amount of funds available. For this, I've heard it's 100 million, and this program will be available until that money dries up, right? And I've heard into summer, I've heard 6 months. Last year we had a program, we've helped several clients get into a 10% down program, and that one lasted about 9 months. I think it was rolled out in March, and by December, a few months back, the program dried up, right? So there is kind of a call to action with this. It's something that you'd want to quickly be in touch with an approved lender, figure out your numbers, figure out where you stand, and get out there house hunting.
So I'm texting you right now to call a certain somebody that we spoke to a while back.
Okay.
Um, she's been looking on my portal, and I think this would be a perfect fit for her.
Okay.
So I'm going to start talking to people about this. I know you already are. That's why we're here today. And guys, if you know anybody that's been struggling to buy a house and wants to buy a house, they just don't have the down payment, this is a great opportunity right now. Yeah, you know what happens if the market crashes? What happens if I lose 20% tomorrow? Well, you know what? CalFHA or HAFA is here to take the risk with you. They're not going to just
Right.
die out on you. But
Exactly.
also, what happens if the market crashes and you buy a house for $1 million and it goes down to $800,000? You suck it up, you keep making the payments, and in 10 years, you're going to have more money than what you paid for,
Who
right? I mean,
cares? Who cares the value of a home,
right.
right? It's your first home, right? And the most important part, and why I say who cares, and I don't mean to be kind of, like kind of rude about it, but the reality is that your payment is fixed.
Right.
Right, your payment is fixed over 30 years regardless, right?
Yep.
You're literally playing with the bank's money, right? The bank's willing to come in and pretty much let you borrow an entire amount, yet you're receiving all the benefits of home ownership, right? And so if the value drops by 100,000, great. We probably wouldn't be selling at that time anyway, right? Because there's probably be some, larger circumstances in the economy that it probably wouldn't, justify selling. And it wouldn't really matter. I say, who cares? Because your payment would be the same, right? And versus, renting, for instance, in which we know that rental amounts move up, especially during, tough economical times, right? More demand. If people are leaving housing and going to renting, then rents go up, right? Naturally, right? So
Just want to do a quick anti-commercial for this company really quick. Hang on a second.
anti-commercial.
Anti-commercial. I just got this on my door. These guys are promising to do really great jobs, and I've been a customer of theirs for 3-4 years. Not the secure space. It was another company, and then it was a storage place. It was right by the DMV down here, right?
Martindale.
And great people, loved them, no problem. They gave me an awesome deal, knowing that they're going to increase my rate 5% every year, right? That's great. Well, new owner comes in place. These guys right here, and if you see this thing right here, be aware. I'm not saying not to buy them. I'm not saying anything. I'm just saying this is my story. I was at $205 a month for my storage. It was a big storage, right? Because I was helping my project manager with her staging stuff. I had crap in there. Well, new owner comes in, they pave the grounds, and all of a sudden they lost my account. I couldn't get in for weeks. I'm calling them, and they're like, "Oh, hey, your account went. We don't have any record of your account." I go, "Well, that's bullshit. I've been a paying customer. You took my money last month." "Oh yeah, I don't know." And I went into there, and they're like, "Oh yeah, the new rate is $250 a month." They raised me 25%. So yeah, I'm a little disgruntled. Again, I'm not saying not to use these guys. Right here, I'm not saying not
your
to
personal
use
experience. That's horrible, to be honestly. It's like we lost the contract. You can't access your stuff, and then now
Yeah. So
rates
I cleared
have shot
out
up.
all my stuff last Saturday.
Good.
I voted with my dollar, right?
Good.
And they had my unit had rat problems. I'm assuming that the other units had rat problems.
Hey
I
man,
don't
you
know.
can't store food in there, Vito.
Okay.
You can't store your junk
never
food
did
in there,
that.
bud.
I mean, it was plastic and computers and furniture. So
that's gross.
We have rats everywhere, right? We have massive squirrel and problem at the park, etc.
Horrible.
Okay, so enough of that gripe.
Onward and upward.
So, okay, CALFHA, that's a great thing. Guys, if you're thinking about buying a house, this is absolutely fantastic time because there's very, very little competition.
We have a window of opportunity right here. We really do. We really feel like even if we, go back to rates and stuff, that, we see rates, settling down even more as we move into summer, right? And what will happen is it's just going to fuel the market,
Yep.
right? And so, further making it difficult for the first time home buyer to get in, right? And so, and I've been saying this for the last few months. This is kind of the year for the first time home buyer, and I think our window is now. And so absolutely, it's a call to anyone out there who's even considered, don't know where they stand, have a friend, a family, a son, daughter, anyone that that is potentially interested, that's renting, that just doesn't really is interested in it, but just has never really taken the steps, or maybe has and just found that found that they weren't able to qualify or didn't qualify for enough. I mean, this is a lot of what we have here locally, is that we've got who are approved, but it's just they're right on the cusp. They're just a little bit short from what they want, right? And a lot of it is because you're doing minimum down payments, right, of 3 to 5%. Well, now if you can come in with 20%, your approval shoots up, right? Now you
more
have the
competitive.
ability to to really get that house you want, right? And
Right.
so I can't reiterate enough how great of an opportunity this is. And again, let's schedule a call, a 10-15 minute call. It's no obligation. Let's understand the program, a little bit about your background, and figure out if this works for you. And again, in the midst of chaos lies opportunity, right? And the only way to get in is to really take that first step.
Yep.
And see if it works. So yeah, no, I've had so much interest. There's a lot of people. It was just positive. There's a lot of people talking about this right now. I've had a lot of clients that were maybe already with CalFHA or were just approved, and I've kind of gone back through all of them this week. We've reapproved them to this program. We've talked about them, and reapproved them to this program so that they have a better opportunity to get into a home. So yeah, it's a good deal.
Yeah, understand we're coming from a point of sales, but we're also coming from a point of we understand this market. I've been in this market for almost 20 years. You've been doing this for over 10. You understand that this is an opportune time, because what happens when the market starts to collapse, then investors come out, then more buyers come out, and then you have more competition. It's the same thing when, like we saw over the last 3 years, when there was fierce competition, the market was a firestorm, and everybody's like, hey, I need to buy a house now. Well, okay, but then you're paying over.
Yeah,
You're
I
paying
don't
over.
see it collapsing. I just see the market getting strong again and just gaining so much momentum. And like,
Right.
do we do good as professionals in the business when that market? Of course we do, right?
Yeah.
Like there's more money in there, right? So, it's just the type of client we're able to help is different, right? And a lot of what I do is first time home buyers, right? These are the clients, and these are the wins that are really special to us, right? And so when the market's on fire the last few years, are we busy? Absolutely, right? But we're just not able to help a lot of the people that really need it, unfortunately, right? And
Right.
we're helping more, move up buyers. We're helping more just kind of, different types of clients.
Yep.
And so when we see the opportunity, yeah, I mean, I look at it at all from a sales perspective. It's just, we're here to provide very good advice, right? And if we're able to do so, then we're helping people realize their dreams, and then that's all it is, right? And so currently where the market's been, and by way of these programs, it's like there's a tremendous opportunity today, and unfortunately we can't always say that, right? And so it does, it is very important that people understand that.
Right. Right. And I get that whole idea of, oh, I want to wait for the market to collapse and see where it goes, or what
Horrible strategy.
so do I. Absolutely.
Horrible strategy.
Am I looking at houses right now? I absolutely am. Am I writing offers? I've written quite a few. Nothing's got accepted because I'm kind of a lowballer, but at the same time,
So many clients do that. It's really a poor strategy, I'm sorry to say,
yeah,
and honestly, waiting for the unknown is it just never plays out, right? We never
right,
know markets change until what? Till they're going in the other direction, right? If we had a crystal ball, I probably wouldn't be sitting here today talking to you.
right. We
And
could say that the market's already in an upward swing, right? I mean, if you look at the numbers that I presented over the last week, I could give you a story saying that the market's already going upwards.
yeah, I mean, it's so crazy because and I operate in, gosh, over several states. It's more importantly over Northern California, right? And so, I'm in many different cities and communities and counties, and it's just crazy that from one to the other, sometimes the sharp, changes that we see, and certainly certain parts of the Bay Area, it's just much different, right? And it does change literally over a week or two. We can see a crazy swing, right? And I'm talking to professionals like you all the time, right? We're in offers all the time, so we're able to really see what's happening,
Right.
and the only way to be in there, it's a full contact sport. You got to be in it. You got to be doing it every day, to really be able to advise, appropriately.
It's so true. And that's the difference, when we're here every day, living and breathing this stuff. I talk about it every day. I do research on it every day. And I follow a guy named Lundquist. He's an appraiser up in Sacramento,
Oh,
and he's
he's so good.
amazing.
Yeah, I think I turned you on to him. I'll
I
take
think you
credit for
did,
that.
but dude, I'm
Yeah.
telling you, he's like
Isn't
my
he?
new like demigod.
Isn't he awesome? Yeah,
Yeah.
totally. Yeah,
Yeah. As
he's
a matter of
amazing.
fact,
He
I
just
just got his I don't know if I should bring it up. Did
too
you see
late.
yesterday's meme? It was a chart
Uh,
that said F around and find out. And
oh
it's
yeah,
like,
yeah, yeah, yeah. I love that. I love using that right now for many things, but yeah, totally. He's great. He's really, really good. Puts out good info, and a lot of that stuff. I mean, I operate obviously in Sacramento as well, but it's stuff that is, what's cool. What I've found too is like I'll take some of his stuff, and then I'll go look in other markets at kind of his analysis and compare it to just to kind of see, um, how it compares, right, with different
right.
counties and stuff like that. But yeah,
He's
no,
really helped me level up my numbers game. And I'm a kind of a numbers guy, but this guy's just to the 10th level above
yeah,
me. And so when I see something, I'm like, oh, I need to try to do that. And there's so much
right,
stuff that he can do
right.
that I can't. And I try to emulate it, try to figure it out. I'll spend an hour trying to figure out how to do it. I'm like, here it is. This is San Jose. This is Santa Clara County. He's like, dude, thanks, man. So it's really helped me. And I think he appreciates it too. So, well, cool, man. We've been talking for 40 minutes. I only
Man,
wanted
awesome.
to do this for 15, but that's what happens when two buddies get together and start talking.
Yeah, absolutely. We could talk all day, right? And so,
Yeah.
no, absolutely great to be on. Good to share, what's happening. And, yeah, I obviously always welcome the opportunity to come on and be able to talk to you and be able to share, what's happening out in the market.
You just need to let me know what day works best for you and what time, and then
Perfect.
we'll just schedule it
We'll go
because,
off, we'll go offline right away and we'll kind of talk about that.
all right. I'm
Awesome,
Vito
Vito.
Scarnecchia, and this is,
Hector Ramirez. Thank you guys for your time. Have
we'll
a
see you
great
out
day.
there.
Yes, sir.